So the high-low method is one of the ways that we can estimate mixed costs by breaking them down into their variable and fixed cost component. And so I've cooked up an example here and it splits out through all the different months, and there's gallons used and total cost. And basically what you're going to want to do for the high-low method is you're going to want to label the highest at level of activity, and it's got to be activity, and it can't be highest dollar cost, otherwise you'll get the problem wrong. So you're going to want to go through the highest level activity, so used, and you're going to want to point out the highest and the lowest months. So right away, this 9 looks pretty low to me, and it looks like the only 9 on this poorly made column here. So this is going to be our low month, and 14 is our high month. So right there, we have our low and our high right there. And the equation that you use for the high-low method to start getting your equation for the variable portion of the mixed cost is you have difference in cost over the difference in activity. So in this example, we're going to have our difference in cost. So we have, and you always want to put the high level first. So the higher level of 1500 minus the lower level of cost in 1000 dollars over the difference in activity, which was 14,000 minus 9,000. And this comes out to, move this over here, $500 over $5,000, or 5,000, I guess, gallons or units of activity, right? And just equal that out to 10 cents per gallon of activity. So the equation that we're going to want to split this into is one that you've seen your entire life. It's y equals mx plus b. And what we've just found here is the variable portion. So it's that m right here. It's the slope of this equation. And the y here would be your total cost. And then this b here is going to be the fixed cost portion of your mixed cost. And so right now what we have is y equals 0.1, 0.1 multiplied by that x, which is the level of activity, plus b. And so what we're really going to want to find is the fixed cost portion of this mixed expense here. And so the way that we do that is by picking some numbers to plug into this equation from our previous example. So we'll do August, and so we're going to need to remember that we used 14,000 gallons and that our total cost was $1,500. So if we can set this up within the bounds of the equation, it's 1,500 for the total cost equals our variable cost that we've found out up there, times the number of units we used, which was 14,000, and then plus b. So right here we can just multiply this 0.1 into there, and so we get 1,500 equals 1,400 plus b. So it's pretty obvious what's going to happen now. We just multiply this 1,400 across, and we get b equals 100. So this 100 is our fixed part of our mixed cost. So if we were making the CM income statement, we would want that this 0.1 would be in the variable cost section right here, and then after we get our contribution margin, that 100 would go in the fixed cost portion of the CM income statement. And so now that we have the B, we can actually just rewrite our equation. And so we can generalize it to be able to estimate other levels of activity and how much they're going to cost us. So $0.1 times x plus that 100. And so in the example I'm looking at here, we're wanting to estimate the level or the cost that we would incur if we used 12,400 units. So using this, if you want to, you can stop the video and then kind of find out how much it would be in your estimate. So I'll give you a second to do that. Okay, so now we'll do it and you can check your answer. So we have the total cost. I'm going to write this out instead of y. So total cost equals our 0.1, and it's pretty easy, times that 12,400 level of activity that we were expecting to use this month, equals 100. Multiply that in, and we get 1,240 plus that 100, so 1,340 equals our total cost. So this is how, or this is obviously, this is just an estimate of what we'll pay, but the high-low method is how you're going to take a mixed cost and you're going to break it into its variable cost and fixed cost component. And once again, the B right here is going to be your fixed cost, and then your variable cost is going to be that 0.1, which will change with each additional gallon that you consume for that month.